Okay, so for anybody who's just joining, we're just looking at one of Minsu's charts. He's looking at Ping An Bank, and we are talking about how to organize the lines, the weekly lines, and how you can change on the right what they say in this. To get to this box, you go to the menu on the right side, scroll on the right side of the screen, scroll down to what looks like 3 squares. Can you show us down on the right side of your screen? Yes, that. That's the icon to pull up what's called the object tree. And the object tree looks like this. This has a list of everything you've done on your chart. So if you put on a weekly level, if you put on a line, a brush stroke, or whatever you put on, it's there. It'll just say like horizontal line, but you can change that to write whatever you want. So you could write weekly level, and then if you want, you can create a little folder for those by going to the folder icon that's under the word object, of object tree on the top of the screen. So yeah, and then you can play with those. Yeah, put all those in the folder, and if you want, you can name them. So, okay. Anything else to show us about this Ping An chart?
Question?
Not really. I tried to do it and then I lost all my charts. So
yeah, I mean, that's a W coming in right at the end. You know, yeah. It hits 25.31, and you can see it really respects that weekly level. It hits the level, it bounces right back to the weekly 1981. It bounces right up almost to the 25.31. That's the M forming right there, and then boom, it crashes.
Yeah.
You know, and when it crashes to the weekly 1744. So clearly it's respecting these levels. The 1191 seems like an important level too.
Is this W confirmed?
I'm sorry?
Is the W confirmed?
I don't see a W. I see a W going back if you look at July. There's a W there. No, July.
So it's an M,
sorry.
The last one.
When I say July, I mean after it says 2018 and then it says July. Yeah, like where it says, yeah, there. To me, that's the B of the W. The A, B, C, D, E. That's the B. If you want to draw the W, go to the right, to the left side of the screen, to those tools. Go to the one that's under the letter T. Under the letter T. Under that. Press that. Oh, wait, I'm wrong. Sorry, go to the brush, the one that's over the letter T. Click that. Yes, now go to polyline. Yes? Now, each time you click, it'll create part of the line, and when you're finished, double click. So you have to play with it a little, but it can do like an A point, B point, C point, D point, E point, and double click. And now you can change the color and stuff like that, make it like a prettier color. You can go to the bottom of that, press the color again.
This one?
Yeah, and look at the bottom thickness. Yeah, you can change the thickness of that line also. So you can change the color and the thickness. And, you know, if you want to keep that W on the right side of your screen under the object tree, maybe you change the word polyline to W or something like that.
Mm-hmm.
But the polyline tool is very useful because it allows you to draw these like, you know, A, B, C, D, E. That whole idea of A, B, C, D, E is a big part of trading. It gets into later what's called harmonic trading, which is like a really interesting and much more advanced form. Hi, Nicola.
I had another question.
Welcome. Yes.
Hello.
Ping An. Hi, Nicola. What's Ping An Bank?
What's Ping An Bank? It's a bank.
Respectfully.
It's a bank in China.
Respectfully, but did they do anything specific, like anything special? Why did you choose this bank?
Actually, not much reason. Like, I just saw this chart. I was just like browsing just a bunch of stocks. Like last week, I was opening the pharmaceutical companies, and the pharmaceutical companies were very dramatic. Like they didn't have much history, or like their charts were fluctuating way too much. So I just chose this one just to look at because like they're respecting the lines pretty much when I drew the
good reason.
And then I haven't draw the lines of the dailies or 4 hours because my Apple crashed. Like like lost all the data on the Apple, so I stopped doing it at some point. But yeah, those are the reason why I chose this one.
That's good. I mean, sometimes I just look at Visa, MasterCard, American Express, all kinds of things. Sometimes I just Google best bank stocks to buy. I mean, I used to do that for like a whole year. I was here, stop sharing for a minute.
Yeah.
So I'll share my screen. Nicola, since it's your first time, if you do have any questions, feel free to kind of jump in and ask. So like you see with my chart, how many different lists I've created over time. Robotic stocks, restaurant stocks. And I don't have that many in every single one, bank stocks. Like I don't have that many, but it's just ones that I've looked at. And then some I just think are things that are going to be important in the future. Psychedelics is going to be really important in the future. Psychedelics is like after marijuana, they're starting to make things like, I don't know, the psilocybin, I think is the chemical in mushrooms. And they
Yeah.
use it for people who have PTSD. Now, none of these stocks are on the stock market yet, which means they're not. Now, you can still buy them. Wow, what happened to this one? They're all OTC, which means over the counter. You can still buy them. Codebase. This was the mushroom one. I'll have to find. Sometimes when it turns red, that just means they changed names, and you need to find the new name. But so like, I think this was the one that the guy on Shark Tank invested in. But anyway, I think these are going to be in the future very big stocks. Right now they're OTC. You can still buy them. The problem with buying an OTC stock is they give less information to the government, so the price can really jump a lot. Environmental services, I think, will be big in the future. Robotics, mining for precious metals, pharmaceuticals, platinum and palladium, I think, will be big in the future. Uranium, I only know of one uranium stock, but I think uranium is going to be big in the future. Nothing good on the chart right now, but this is the 4-hour. Look on the daily. I mean, I don't see any nice W's almost. Here was a little W. This is not a good W. You never want this C point.
What about the one in like August? Like
And around here?
yeah, like up there.
Down,
Is it
up.
W?
No, well, the down part is too far down. You have down, up, but then you have farther down. And that's no good. A W needs to be down, up, down less, and then
No,
up more.
I was saying the small W inside the A, B, C points. Like I see, isn't
Oh, down, up, down, up. That one. Like down, up, down, up. This one.
no.
Because the problem with this is it didn't confirm, right? The confirmation would be here at the C point, and the
Yeah.
price didn't cross over, so that didn't confirm. You see another W? You mean here 1, 2, 3, 4?
Like that. Mm-hmm.
And then it confirms right here.
Yeah.
I mean, look, you could have made a profit, sure. If you bought, let's say, here's A. The problem with this W, as I said before, is we like big bottoms. And this is not a big bottom. This is like very pointy bottom. We don't like pointy bottoms. We like big bottoms. And yes, if it confirmed and you bought right here at the confirmation, you could have made a little profit. I mean, it's something. Let's see what that profit is. So to know what the profit is, I go to my price range, which is under, this is where this is the buying and selling tools, long, short, forecasting, all these things. You go to the price range, you click it here. Let's see, I bought here and you sold here maybe. I mean, that's a 4% move. 4% is a lot of money. You know, it depends how much you start with, and it depends if you use leverage. I don't recommend you guys using leverage. You're too new to this. Do you understand what leverage means? So when you buy stocks or you buy things, websites will allow you to use leverage. Leverage means they lend you money. So let's say that your initial trading account is, let's say you're starting with $1,000 to trade. Now you're not spending $1,000. You never risk more than 50. Well, this is 1761. Let's say you're starting, with $1,000. Or, you know, maybe that's too much. Should I make it 100? What's more realistic, 100 or 1,000?
eBay.
eBay, fine. So we're starting with $100. You're never risking more than 5%. So you're never risking more than, you know, $5. So let's say you bought 100 shares of this. Sorry, not 100 shares, $100 of this. So you're buying in at 1761. So what's 100 divided by 1761?
Five shares, 5.6.
Okay. So with $100, let's say you can buy, let's just make it 6 shares. Let's say you spend a little more. So you buy 6 shares. Now you're buying it at 1761. Here you'd be selling it at a price of, let's say, 1837. So you sell 6 shares at, you know, 1837. That's $110. So you made $10 on this trade. Okay. Now with leverage, what you would be doing is you'd be borrowing money from the stock exchange or the wherever you're buying stocks, or with coins, you're doing it from an exchange also. And so let's say you use 10x leverage, which is dangerous. This stuff is dangerous. Then you're not buying 6 shares, you're buying 60. You're not spending 100, you're spending 1,000. And you're not making $10, you're making $100. Leverage can go all the way up to 100x leverage. That's where it gets really dangerous. Because remember, if it goes down 1 cent or 2 cents, that's 10 times that or 20 times that. You can lose that money too. You know, so if you use leverage, like a lot of people these days on Robinhood, on these, like, you know, the gamification of stock market trading, where it's all a game and it's all fun. I don't know if you heard the story about a kid who killed himself not that long ago. Robinhood just settled with the family. So he used a lot of leverage, and he was trading options. And what happens is he made some big sale, and he didn't have a lot of money. Let's say he used something like, I think he used something like $250, but he did it at 100x. So he was using $25,000. It was something even bigger than that. Maybe he did 2,500, whatever he did. On Robinhood, he checked the app in the morning, and it said he was an 18-year-old kid. and it said that he was down $700,000. Now, in fact, he wasn't. He didn't understand enough about the stock market. Last week we talked, or maybe 2 weeks ago, we talked about options, if you remember, right? And when you buy and sell options, there are a lot of strategies that we definitely don't need to get into, but that young people have gotten into where you buy and sell at the same time. It limits your risk. So anyway, he bought and sold at the same time. You know, why would you buy and sell at the same time? Well, I mean, let's say that I think this market is going to go down. So I make a sell. Let's go to, let me show you a word balloon here. I like these call outs. So let's say I sell here. Okay, I sell here, but when the price comes down here, or let's say the price comes here, I want to buy. And that's okay. You can try to buy, this area, you know, and buy here, but I'm still in my sell. You can have more than one trade going at the same time. That's okay. And so he did that. And it's like the trade that was going, that he lost on Robinhood, he could see how much he lost, but he couldn't see how much he made. If he just waited a day, he would have found out that he didn't lose all that money. But he left a suicide note, and the suicide note said, I'm an 18-year-old kid with no job. How was I allowed to borrow $500,000? And he killed himself. You know, like, this can ruin lives if you don't know what you're doing. These things can be really dangerous. And so I don't recommend anybody use leverage unless you really know what you're doing. I occasionally will use some leverage, but I will never use anything
But
like 100.
David, just to understand it, when you using the leverage, you have to give something in guarantee, right?
No,
No.
that's the danger.
So I can just like go
It's
to the
not like
Robinhood.
it's not like a bank loan. You don't give anything.
So I go buy the shares and that's it. I don't need to have money in guarantee or something like that. So maybe another assets.
No, you don't. It's not
So,
well, because the plan is they're going to lend you. So why would the bank do this then? Just have some dots here. Why would the bank lend you money? Because they expect you to lose it. And then when you lose it, they'll take your money. So let's say you put in $250. Oh my God, I keep doing this. You put in $250. They'll let you borrow anything. It doesn't matter. They're just going to take your $250. But here's the deal. If you lose that money, you owe it to the bank now.
but if
It doesn't go away.
when you win, you still have to pay like what you borrowed, yeah?
If you lose it, sure. That's what's so dangerous about it. They'll give kids all of this loan money to play with on the stock market, and if they lose it, you have to pay it back now. You know, it's really, really dangerous. Leverage trading is actually a very big problem in the American economy right now. There's billions and billions of dollars of people leverage trading. And what happens is the stock market knows this. So let's say they know that everybody made a trade here. They will just dip the price right below so everybody gets closed out. They lose all their money, and then they'll bring the price back up. So until you know what you're doing, you don't want to leverage trade. It is not a good idea. Okay, let's get to today's sort of lesson. Here we are. Okay, so what I want to talk about today is to start, here's our 5th meeting, first to review what we've done so far, which is kind of these 5 things, and then look at any of your charts if you want to show it, and then we'll get into today's lesson, which is Fibonacci levels, and if we have time, the RSI. So horizontal S&R lines, trend lines, M's and W's, EMAs and SMAs, and MACD divergences. That's what we know so far. And I know for anybody who's new, that sounds like a lot, but let me clear these for the moment. So we started with looking at a monthly chart, maybe. Monthly is the farthest out we can go. And we could do this and look at something else. I just happen to be looking at Bitcoin right now. But, you know, I looked at the monthly chart and then I drew the places where price touches the line. So here's the all-time high and I wrote, oh, that's the weekly. Why is weekly up here? It's weird. Okay, so the all-time high and the all-time low, and then this is the only place I saw that it was touching it a few different times on the monthly level. You could draw more, you know, this is not, there's no rules. This is more art. And then, so those are my monthly levels. Then I was looking at weekly levels. Maybe I didn't, oh, here are my weekly levels. And I drew a whole bunch more. I felt like this was a location where it touched. Let's see, why did I draw this one? Oh, because it touched here twice. You know, it touched here, these 2 times, and then, but this doesn't seem like a super important level, so maybe I'll take that off later. Is that important? Maybe not. Then this seemed important because it touched 3 times, it touched again, so I'll keep that. Down here, you know, I thought these were some important levels because it touched a whole bunch of times and then touched again, just places where it respected the level. Then after weekly, we went to daily and we did the same thing. We added our daily levels. And the problem is once you start doing this, the chart already starts to look a little crazy, right? There's just so many lines, it gets busy. But the thing is, you have to remember, you're not usually looking at this chart on a daily time frame. When you're actually investing, let's say you're looking at 1 hour, and when you zoom into 1 hour, you can see there's no lines. When you zoom out to 4 hours, okay, you see a few lines. This is good. This isn't busy at all. This is very helpful because it shows me a little range. I could have bought here, sold here, then bought here again, and then sold here. That would have been 2 good trades just on these lines. And I didn't have to do anything. There's no analysis here. It's just having drawn these lines. But the farther you zoom out, the more of the lines you can see. You know, and this would have been a trade too. You could have bought at the bottom of this range. It didn't come all the way up to the top, you know, but then if you sold here, you would have made a great profit. You let it come back down and then it touched the ranges again. It broke through this range and touched this range and then it broke through. I mean, so respecting the ranges is pretty powerful. These are your S and R lines, your support and resistance. And then I also added 4-hour time frame, which will make it look absolutely crazy. Because then you have lines everywhere. You know, and look at this on a daily, it looks ridiculous. You can't even see the chart. But mostly when I trade, I start big and move in. You got to start big because you have to see the big trends in the market. Which way is Apple going generally? But you're not trading on a daily chart. You're probably trading on like a 12-minute chart. And on a 12-minute chart, there's very few lines. And so you have a much better idea of what to do. I mean, look how powerful this line was here. It touched it, it touched it, it touched it, it touched it again, again, you know, and then again, and then again, and then again. Like, this line was so powerful here that it was a good place to be watching what's going on. But that's the 12-minute. You cannot look for trades on like the 3-minute chart. Look, you can if you're an expert, if you know what you're doing. But this is how people get wrecked, is they start trading and they look at the 1-minute chart, or, you know, people go crazy and they look at like the 5-second chart. That is a terrible idea. Every 5 seconds, you're going to have a new candle. You just can't trade like this. There's so much anxiety. You know, if you're watching the 5-second chart, you're like, oh my God, it's going down, I have to sell. And then it's like, oh, nothing. Oh no, it's going up, I have to buy. You know, and then, oh my God, oh no, it went back down, I have to sell. Like, you can't trade like that. Unless you are so, like, you really know what you're doing as a day trader. I never look at these. The most I'll look at is 1 minute, but generally I'll trade on the 12-minute. Is, I think, pretty reasonable. Each candle is 12 minutes long. That's okay. But I start on the daily to get an idea of what I'm looking at, you know, and I end up zooming in. Daily, 12-hour, 8-hour, 4-hour, 2-hour, 1 hour. You know, if you want to have these up on your chart, you just click the star next to the time. You can always add your own, you can't see it here because it says you're screen sharing, but on the bottom of this, you can add numbers. Okay, so that was our S&R lines. The next thing we practiced was, let me take off the 4-hour. The next thing we learned was the trend line, and trend line is kind of what it sounds like. You start at a point and you just have it touch other points. That would be my trend line. That's it. Now, there are other ways to look at it that are more advanced that we'll talk about in the future. The reason we might use trend lines is it helps us with something called chart patterns, which are pretty important. So let's say we have one off the top and one off the bottom. And what this would show us, there's a name for this pattern. And I'm not super good at these yet. This is like, I believe, what is this, an ascending triangle? Or is that a bull flag? Oh, maybe this is cup and handle. Oh, I think this is a cup and handle, which looks like this. A cup and handle chart is that's a bad sign for us. I have cheat sheets that I keep. But a cup and handle like this would go down afterwards. So that's not a very good sign. But like, all of these things have different sort of patterns, you know, and you figure out the patterns by drawing the trend lines. Like this was sort of a straight line. And then you had, looks like a downward. That is was that a falling triangle? That is a descending triangle, and that means price might go down. I mean, it doesn't always happen, but like that's called chart patterns. I've learned them, but there's just so many of them, and it's not really how I trade, so I'm not going to talk about them now. We'll do a different class on them. For basic trend lines, I think you just want to draw a line from the bottoms. Why? Why would you do this? Because this is a support and resistance. So like this daily level right here, this daily level right here, these are good support and resistance. When price comes to this level up here, we're going to have to decide, do we want to make a trade? Do we think it's going to go up and cross this, or do we think it's going to go back down? And we'll decide that when it gets to, you know, this point right here. When it gets to this point, that's when we'll decide. But we also have right now, it's touching a trend line. And that's another support and resistance level. It's not horizontal support and resistance, it's diagonal support and resistance. But we still have the same question. When the price touches this yellow line, is it going to go up or is it going to go down? Anytime price touches one of these lines, it's super valuable information for us to look at. So that was the support and resistance line, horizontal, diagonal, and then last class we looked at EMAs. This is a 21 EMA. So this is the exponential moving average. Let's turn that on. Let's make that a different color. Let me make it blue. Okay. And you see, look at how price is respecting this blue line. You know, it's when the price was above the blue line, then it acted like a ceiling for the price. You know, it went through, it came back down, but it touched the price here, it touched it here, it touched it here. It just kept touching the blue line because the blue line was a ceiling. It's just not a horizontal ceiling. It's not a diagonal ceiling. It's a dynamic moving ceiling. And then when the price went over the blue line, then the blue line became a floor and the price touched it again, the price touched it again, the price. So this is another thing. Anytime the price is touching one of these levels, that's where we decide if we want to make a trade. That's the first big thing you need to know about trading. Unless you're an expert, you do not look at the market and say, I think it's going to go up, or I think it's going to go down. That is not good trading. Good trading is you already have these levels and you wait until price touches one of these levels and then you decide, okay, now, do I think it's going to happen? Now, why is this so important? Because you guys, you can't sit in front of your computer 24 hours a day or on your phone watching this. You need to make plans. So let's say I plan that if price comes here, what am I looking for if price comes here? Now let's get into what we learned last week. Let me shut off the RSI. We'll talk about that later. Let me just, I'll just put it there. So last week we talked about this MACD and the idea of a divergence. So let's talk a little about that. Now, what am I looking for? We said we're looking for divergences. Can somebody remind me what a divergence is? And by the way, remember on MACD, when you load this, and you load it by going to the function fx, if I add MACD, the original chart will look like this, right? This is what it'll look like. This is what the chart will look like. It has the signal line, the MACD line, and this histogram that we talked about last week. What I usually do is I change the colors to make them more suitable for me. I don't like these colors. I will eliminate these two lines because I like this to be bigger. And then, I'll change the colors to whatever I want them to be. Yellow, and let's make it really ugly. Yellow and green and light blue. And it's the ugliest color. Okay, let's make it light. There, that's nice and ugly. That's really difficult to look at. Okay, and then I also don't like when they're bars like this. So I'll usually change it to an area. I prefer that. But you do it whatever you want. It makes no difference. As you get more advanced, here, I'll take off this one then. We could use my ugly MACD. So actually it's kind of pretty. It looks kind of artistic. So a divergence is when this is momentum, right? This is how fast the train is going, how much money and people are coming into this project. So this is Bitcoin. How many people are coming into it? As momentum is going up, so here's a pretty good example. Momentum here has been going up, right? It was going up, but the price was coming down. And what that means is the price is probably going to change direction in the future. If there's more money and more everything coming into the market, the price is going to go up, and so more momentum came in, And then it never really left this momentum, and then it shot up and price went up. Let's find a better example of a divergence, a place where what I'm looking for is a place where price went down while momentum went up. That's what I'm looking for. Maybe let's not look on the daily, let's look on the 4-hour. Okay, so price goes down, momentum goes up. That's what I want to see. So let's look before the big moves. Here was a big move up. What happened before? Yeah, so here's a decent example.
There's one in August.
No, it's not. I'm backwards in time. We're in July. I'm just looking for examples. Okay, so here you had momentum clearly coming up, and you had price coming down. And, oh, let's see, these should be the same length. Also, when we're drawing, this is bullish, right? I don't know if we've ever talked about, I think we have, bullish and bearish. What's bullish?
It is when they're about to meet, like when they can meet, and bearish is when they first.
Well, they're bigger terms than that. Bullish just means any time when price is going up. Like you could say the American stock market is bullish. You could say I'm bullish on corn. I'm bullish on gold. That just means I think the price is going to go up. How would you trade that? You would long. Long means I bet the price is going up. Now, if I said I'm bearish on wheat, I'm bearish on corn, I'm bearish on silver, that means I think the price is going down. How do you trade that? You short. Long is when you think it's going up. Short is when you think it's going down. I do not recommend you guys ever short, not until you're more advanced. Why? Well, let's say I make a long trade. So I see momentum is coming up, price is coming down. And so I want to buy in. Now, I'm not going to buy in yet. I know there's going to be a change. Momentum cannot keep coming up. More and more money into the market, and price keeps falling down. It's not possible. It doesn't make sense. So I know the price is going to change direction. So what happened here? This, honestly, is what I would call market manipulation. Wall Street has these charts also. Wall Street drew these lines also. They knew that everybody wanted to enter right here. So everybody bought, Bitcoin, everybody bought Apple, everybody bought Tesla. What does Wall Street do? They drop the price. How? They sell it. They sell millions of shares, millions and millions of shares. Then the price drops and all the people like us, the noobs, the retail, we're like, oh my God, I was wrong. I was wrong. The price is dropping. I have to get out. We all sell, and then Wall Street buys it. But we were right. The price did change direction and go up. This was what's called a fake out. So you have to be ready for fake outs. So let's say you're watching this, price is going to change direction. You let price come down. Now we are actually better than the average person because we have our S&R levels. There are two daily levels right here. So when you're watching this daily level, the first time that price came down and touched this daily level, we're watching what's happening. Is this a good time to buy? What do you think based on the momentum? Is that a good time to buy? Right. This is the first time it touches our daily. Would this have been a good time to buy, do you think? Carissa, what do you think?
Trying to figure it out. I'm not sure, honestly.
What do you see in momentum? Does it look like more people are coming into the market right here or leaving the market?
Leaving.
So you don't buy. It's as simple as that. You know, you already have your levels, your daily levels. Price came to that level. You already had a pretty good indication that price is going to start going up. This is how we're trying to put everything together. We call this stacking probabilities. You only want to take a high probability trade. So you want to stack these things. So we had our support and resistance levels. We have our blue 21 EMA, and we could put on other ones too. We also, if you remember, we had a 55, we had a 50 and a 200, you know, that we could look at. We don't need to right now. I think what we're looking at is good enough, but we're below the blue line. So we know that it's probably going to come up above, you know, so this is a pretty good buying opportunity. It was just testing the blue line. It fell below. I think it's going to come back and test it again. It's been respecting here. It respected it, respected it, respected it, respected it, respected it, respected it, respected it. Again and again, it's touching this blue line. So it came down below. I think it's going to touch it again. So I think it's a good time to buy. Now it touches my daily level. I go and I look at my MACD momentum. Momentum's going down. I'm not touching it. Not yet. I'm still watching it. Then momentum goes lower and lower and lower, and it touches my next daily line. Well, let's move this over here. Now we're kind of over here where it touched this daily line. Does this look like a better opportunity to buy? How's momentum doing right now? It's hit the bottom, which kind of means that it's the low price, and it's starting to turn direction and go back up. This is where I'd buy. You know, and so you buy in here, you get a beautiful entry, and then price, you know, price shoots up. Now, you definitely need to have take profit levels. So let's talk about if you wanted to buy this over here. How would you kind of do that? Now, I'm not going to tell you what exchanges you should use. It's different in every country. I use TD Ameritrade for stocks. I use Binance or Bybit, or I mean, there's so many exchanges. You have to find one that's right for you, that's legal in your country. But here's how you set up your trade. You go to the long position if you think price is going up, or short if you think it's going down. But you go to long position. Let's see, we'll put it in here. So let's make this bigger. Okay. Now this is our long position. The red is our stop, the green is our profit. Now you never want your stop loss to be, I mean, this is crazy. This is a 12%. So you could make it if you wanted, let's say you wanted to make it 5%. Now you could put your $100 onto this. And when the price gets down to this, if it does, then you're out. You know, you set your stop. So when you buy or you sell the stock, you would set this level right here. This is, you can see it on the right side in black. So at 5%, here we're talking about 27,800. So that would be my sell price. And that means I can't lose more than 5%. But what a lot of people do right now, let's say, how do we figure out our take profit levels? We're just going to look for support and resistance. So what are good support and resistance? Let's say this over here seems like an S&R level. And let's say this over here seems like a decent S&R level. And let's say this over here
David,
seems like, yeah.
But those candles are after where you set your strategy.
Sorry?
What I'm saying is like the strategy is in this candle where is the vertical line blue, right?
Yes.
Okay.
So I'm buying at, let's say I'm buying at this price right here. I'm buying it 29344.
Okay. And those new lines, the pink ones, you are drawing it based on the candles after the candle that you bought. So how do you know it's good when you did the strategy previously?
Well, you don't know the future. You definitely don't know what's going to happen, for sure. And remember, right now, every one of these candles is 4 hours. So there's no way we could know this far into the future, right? We're talking about making a trade here. This is July 20th at 8 o'clock in the morning. You don't really know if it worked. Let's say you get up here, it's already July 21st at noon. I mean, you don't know. What you know for sure is probabilities. So what do we know for sure? Make this smaller. What do we know for sure? We know for sure that this and this, these orange lines, were important daily lines. We know that. So we know that price has in the past touched these lines. So we know these lines are important. And there's a probability that when price hits this line, something will happen. It may bounce off. That's our first thing we know. Will it bounce off? Don't know. But there's a probability, more of a probability than just picking a place like, I choose 31096. There's no probability that anything's going to happen special at that price. Then we have another probability, is this blue line, and that's our 21 EMA. And that line says there's a probability that if price is below the line, it's going to come back up because it keeps touching this line. And it's been doing that for the history of the line. When it's below, it comes back up. 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 So there's a probability that when it's below, it'll come back up. Now I have two probabilities. A probability that when it hits this orange daily line, something will happen. A probability that because it's below the blue, it's going to come back up. Number three probability is let's say I drew a trend line over here. And, I didn't want to do that. Let's say I drew a trend line over here. This was my trend line. Let's change colors, make it blue. Okay, let's say that I drew, I drew this blue line, and I drew it at this time on July 16th at 4 p.m. That's when I sort of drew this line. And as price was moving, then price hit this level. And so my trend line was like this. I'm watching price touch the line. And then what happens over here? Price broke through my trend line. So now I know this trend line is no longer valid. I need to move the trend line here. And I expect price will touch the trend line, but it didn't. It started touching above the trend line. It didn't touch the trend line. It made a higher high and then another higher high. Remember, these are 4 hours each, so there's plenty of time to watch this. There's no anxiety here. And what we could do if we wanted, because we're not just looking at the 4 hour, what if you're looking at this on a 1 hour too? Let's go back and, where's this on the 1 hour? Where were we? Oh, here, that little box we had on the 4 hour, this is what it looks like on the 1 hour. There's lots of ups and downs, but was the price respecting my trend line? Before it was. It touched it, it went up, it touched it, it touched it, it went up, it touched it again, but now it's not touching it anymore. That's number three probability. That now this trend line, maybe it's not good anymore, and I need to change this trend line. The trend line has changed. Now this is no longer the trend line. There's a new trend line, and the new one looks like this. Because the old trend line got broken. So that's maybe my number 3 probability. So I already have 3 probabilities. And now what I think is the biggest probability is these divergences, where I have momentum clearly going up and price clearly going down. You know, and anytime I have momentum going up and price going down, something's going to change. There's no way that can last. It doesn't make sense. Now, I didn't know there was going to be a fake out, but as long as you're watching the market, you just don't buy. Because look, I wasn't going to buy at this price anyway. We weren't at my daily orange line. I do not buy in the middle of space. You know, this black stuff is just space. I don't buy in the middle of space. I have a plan. So what would my plan be here? Let's say I woke up this morning and it was July 18th at 7 o'clock in the morning. Now I'm busy today. I don't have time, but I look at the chart at 7 o'clock in the morning. Here's what I would probably do. This. What I'd probably do is I would draw. Here's what I want. I want price to come down to my daily level and go up, and I want momentum to do the opposite. So price is coming down. I want momentum to come up and then go down. That's what I want to happen. And then I go and I do my job, or I go to school, or I do whatever I do, and I just check on the chart now and again. Is it following my hope? Price is. But then I'm watching momentum, and momentum's not doing what I wanted, so I'm not going to take that trade. But then momentum starts to go up, and so maybe you don't get into the trade until here. Okay. You know, maybe you entered the trade a little later. And let's say you entered the trade when momentum was at its high point. So you enter the trade over here. We do not want a 9% stop loss. Maximum, absolute maximum is 5%. Never higher than 5%. So we have our 5% stop loss. Now, how would you do on this trade? Would it be a good trade? Let's say on the first take profit level. So on my first, we come in here or something. My first take profit level is right here. What do we do at this level? You take out 30% of your profit, or 25%. Absolutely, you take out money. Do not wait for price to get to your top. Always take out money on the way up. No one ever went poor by taking out money. You know, you always take out money. Will you make less? Of course you'll make less, because if you left it in, you would have hit this target and you had $100 going up, you would have made more. Now, instead, you're going to take out $30 here, and you're going to take out $30 here. So at the end, when it's still going up, you only had $30 left. So yeah, you make less money on this part of the trade, but your chances of making a profit over time are hundreds of percent better. And then the other thing you do is you move this stop loss up to your first take profit level. Now, if I moved my stop loss up to here, now it's not possible for me to lose money. Even if the trade came back down, which in fact it did. Look at that tiny little place. That's the market. That's Wall Street knowing what you're going to do. They're knowing that everybody's going to do this. And so they do this little tiny thing right here, and they knock you out of the trade, and then they go up. So you set your take profit just a little bit below there, just a little bit below, just like a little below right there, and then you're safe. Then you wouldn't have been stopped out. Actually, you would have needed to make it a little lower. But either way, you know, and then you have your long tool and you can see how much profit you would have made. But this is generally how we sort of start. We stack probabilities. That's the idea. So you want to have your daily levels, you want to have your EMAs, you want to be looking for divergences with momentum. Now, the next thing we learn for probabilities. Let me get rid of this. We have the EMA, that's okay. We have the EMA, let's reset our chart. Okay, so right now we're looking at Bitcoin on the 1 hour. Let's look on the 4 hour right now. So right now I see price was below the 21 EMA. It's probably going to come right back up, and it did. Now, I don't know what's going to happen next. I can't see the future. But you know, when you were below, it would have been a good price time to buy because it came back up. When you were below, it would have been a good price time to buy. It came back up, and then it kept going. When you were above, it touched it, it touched it, it touched it. You know, when you were below, good time to buy. It came back up. When you were below, good time to buy. It came back up. You know, so like the EMA is a pretty useful indication. We have our levels. I'm not taking a trade anywhere. I'm not taking a trade anywhere right here because I don't have an S&R level. You know, I would need now. Can I create an S&R level? Sure. Just draw a trend line. There, now I have an S&R level. So now I can see price came to this level, it went back up. Now, if price comes back to this level, I can see what, I can decide what to do. I could draw another level from here going down. And if price touches this triangle, I could decide what to do then. But, you know, without something, without some sort of line or curve or something to watch, you do not just make a trade. You do not just say, I think price is going up. You have to have some probabilities. So then we're always looking for our divergences. You know, here, this doesn't look very good. Price is going up. What's happening to momentum? Momentum's going down. So this doesn't look good to me. Why would price keep going up if people are leaving the market? So there's one more, maybe two more things we really need to know. The first is called RSI. Let's step back up. RSI is another indicator. You find it by going to the function box and just typing RSI, Relative Strength Index. And this is what it looks like. Make this small now. This RSI, it shows us two things. Overbought, which is when it's high, and oversold, that's when it's low. So what does that mean? Well, going back to some basic information on the RSI, it's a momentum indicator. It shows oversold and overbought. It's an oscillator. It goes from 0 to 100. When it's over 70, that means the price is overbought. So here's an 80 line. This dotted line right here is 70. So when it's over 70, like right here, it's overbought. Now the price was still going up. It's just an indication. Here it was very overbought. Everybody was buying Bitcoin. Other times when it was overbought, it doesn't happen that much. Here it was overbought. What happened? Price crashed. When it's below 30, that means it's oversold. What happens when it's oversold? It means it's undervalued. So price went up. So this is a pretty decent thing. We need at least one momentum oscillator. Price was oversold, and you can also look for W's and M's on this. So price was oversold, it was undervalued. You could have just looked at the RSI, bought here, and it would have been a great entry. Price dipped down, it would have been a great entry. You know, but it's not always right. Price here, it continued, I mean, it went up a tiny bit, but it continued going down. Price went down, and it did go up a tiny bit, but it kept going down. So it depends what level, you know, how much money how big a trade you're trying to make. But the reason that the RSI is also important is that we are also looking for divergences with the RSI. So Here, let's look for a time where price was going down and RSI was going up. Fine. We're on, oh, I like the 1 hour's better. So price going down, RSI going up. Okay, here's a pretty good example. RSI is going up. Price is going down. So this means RSI is getting higher. More and more people think this is valuable, but price is going down. Why? What do you think, Ayana, what would be the psychology? Imagine you have all these hundreds of thousands or millions of people sitting at home who didn't really study this stuff. They're just looking at charts. Why would price go down as momentum goes up?
Isn't it what you said about, how is it? Like they are trying to make money. You were talking about Wall Street.
Sure. So with this price going down, who's selling? Is Wall Street selling, or people like you and me, the average uneducated investor?
We are
selling.
Yeah.
Yeah, we're the ones who are selling because we are freaking out and being like, oh my God, price is going down. Oh, I gotta sell. I can't lose all my money. That's us. What's Wall Street doing? They're watching this, and every time price dips, they buy it. Every time price dips, Wall Street buys it. But they're not stupid. They don't buy $1 billion. They buy a little. When I say a little, I mean, whatever, 100 million. But they're buying it. Then they let price go down. They buy it. They let price go down. They buy it. And then at some point, they decide this is as low as price is going. And then it shoots back up. Now, if you were watching this, you could have bought here and sold at the top. I mean, talk about a great, look at this range right here. In terms of trades that you could have made. Make it a little lighter. Oh, hold on. Okay. Look at the trades that you could have made here. Just looking at this. Buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. I mean, you could have been crushing it just by looking at a time when there was a divergence between price going down and RSI going up. Now, if we wanted to look at the MACD also, make our MACD bigger. Don't want them mixed. How do I do that? Okay, there we go. Now, if we wanted to make the MACD bigger, is the MACD also giving us the same sort of divergence? The MACD is also moving up. So if it works on one, it usually works on the other also. This gives us a second probability. Now it's an even higher probability because price is going down while both of these are going up. Yeah, then, so you would have made lots of money on this channel and then price shoots up. But then it's oversold, get out. It's overvalued. So you get out at that point. Great trade. Then it's undersold. It's undervalued. So get back in. Great trade. Then it's oversold. Get out. Here it's choppy. It's, in a range. So I probably wouldn't do anything. I'd just be watching. What am I watching? Momentum is coming down. Okay, but what's RSI doing? RSI generally is still coming up. So, okay, I don't have a clear indication. I don't have good probabilities. I don't know what's going to happen. I don't do anything. You know, maybe you're still in this trade because you moved your stop loss up to here. And so you didn't get stopped out. So now you're still, you know, maybe you're still in the trade. But I wouldn't do anything until it hit this blue line. That would be an indication. Let's see, what would we have done when it hit the blue line? So price comes up, it touches the blue line. What do I want to do here? I don't know. I'm looking at RSI and momentum. There's just no good indication of what to do. So I'm not going to do anything at this point where it touches the blue line. So I don't do anything. Where does it touch the blue line again? It touches over here. What would we do at this moment? Well, momentum looks like it's kind of turning around. RSI looks kind of turning around. You could have bought if you wanted to. I don't know. But what else do we see here? Anybody? Minsu, you see what I see? It's a baby, but I don't want that. No. Down, up, down, up, and confirmed there. So you add the W's and the M's, and you would have bought in, let's say right here, you'd still be doing great. So adding all the things we've learned kind of up to now, you would have killed it. You would have made money all through this channel. Then you would have made money on this big rise. You could have shorted this. Now, I said before, shorting is dangerous. And the reason is, if you long, let's say you put $100 into Bitcoin, into Apple, into Tesla, whatever. You put in $100. What's the most money you could lose? $100, right? If I buy $100 of stock, I could lose $100. That's it. I can't lose more unless you use leverage. But what about shorting? With shorting, you're betting the price is going to go down. So let's say I'd put it here. I bet the price is going to go to here. Now, if I'm shorting, you don't own Apple stock. So when you short, what's happening is your exchange or the company, they're sort of lending you the stock. That's how it works. So let's say I want to short Bitcoin. I am not buying it, I'm selling it. I'm selling it at this, 3,999, but I don't have it to sell. So the exchange is lending it to me. And my plan is I'm going to sell it at this price and I'm going to buy it back at this price. And then I make money, right? Because I'm buying it cheaper than I sold it. If you sell Apple at 100 and buy it at 50, well, then you're making money. You sold it for $100 and you bought it for 50. So now you sold one share for 100. You bought one share for 50. So you still have one share, but now you also have $50. The whole idea of shorting is you think the price is going to go down. With long, you think the price is going to go up. You buy here, you sell here. Buy low, sell high. Shorting is the opposite. Sell high, buy low. You sell it for a high price, get all this money, and then you buy the same thing, but you buy it for less money. So it's a good deal. The problem is they're lending it to you. What if Bitcoin kept going down and it went all the way down to $1? You borrowed that money. You have to pay it back no matter how low it goes. So when you're longing, you have unlimited possibility to make profit. But if it goes too low, you're out. You lost your money. With shorting the other way, you have unlimited possibility to lose money. Shorting is much more dangerous. So generally, you don't want to do it until you're a little more advanced, or you have a very good stop loss that's set so you can't lose too much money. I mean, here, if I took this trade, I would only lose 1.16%. Let's get that down. Let's call that 1%. Okay. So here would be my trade. I would get in here. I would lose nothing because it didn't go back up. I make this money, and this is a 6.46x, which means if you put in $100, you get out $646. That's a pretty amazing deal. You're really just taking money out of the market, but you need to have good stop losses. 1% stop loss, never, ever more than 5. You want to be more conservative? Okay, you can be more conservative. You can give yourself a 5% stop loss. That would be good, then the price, you make money, it goes back up, you're still in, that's good. You could take some of your money out here, but at some point you're going to get stopped out. You were wrong. The price did not keep going down. Okay, there's one other, so RSI is the first big thing we introduced today. And RSI is what's called a momentum indicator. And it's really important that we have something. There are lots of indicators like this. I think RSI is the best, but we need something to show us oversold and overbought. As a very basic understanding of look, Apple price seems high, but is it oversold or overbought? How many people are buying it? If everybody's buying it, hey, the price might keep going up, of course. Something like Apple or Tesla can spend a lot of time in overbought territory. Because even though it's overbought, it's a meme stock. Everybody keeps buying it. But at some point, that's going to crash down. And if it's oversold, people can keep selling it, but at some point, it's going to go up. So these oversold and overbought are pretty important. The last thing I want to show you is Fibonacci extensions. And I have a couple of really great videos I wanted us to watch. It's only like 5 minutes. Let's watch the first one. And then if it's boring, I'll explain it more with words, but it's a really fun video. There's 3 of them. Let's watch the first one. Let's optimize for video clip. I don't know what that means, but let's try it. Okay. Oh, can you guys see me?
Yeah, I see you.
That's weird. I couldn't see you guys. Let's try that again. Oh, that's what happened. I understand. I never knew what this meant before. The optimize for video clip. I don't like that at all. That means you can't see people's thumbnails. Now I can see you guys. By the way, this is my favorite trader right now. He wears a Pikachu hat while he trades so that he's not giving you financial advice. He wears a Pikachu hat and his glasses upside down. He's a multi-millionaire, but he just acts like an idiot so it's not financial advice. Genius. Okay, so can you hear this video?
Say you're me and you're in math class and your teacher's talking about,
Yeah.
well, who knows what your teacher's talking about. Probably
Okay.
a good time to start doodling.
Okay, so let's watch this video.
Say you're me and you're in math class and your teacher's talking about, well, who knows what your teacher's talking about. Probably a good time to start doodling, and you're feeling spirally today, so yeah. Oh, and because of overcrowding in your school, your math class is taking place in greenhouse number 3, plants. Anyway, you've decided there's 3 basic types of spirals. There's the kind where as you spiral out, you keep the same distance, or you could start big but make it tighter and tighter as you go around, in which case the spiral ends. Or you could start tight but make the spiral bigger as you go out. The first kind is good if you really want to fill up a page with lines, or if you want to draw curled up snakes. You can start with a wonky shape to spiral around, but you've noticed that as you spiral out, it gets rounder and rounder. Probably something to do with how the ratio between 2 different numbers approaches one as you repeatedly add the same number to both, but you can bring the wonk back by exaggerating the bumps, and it gets all optical illusion-y. Anyway, you're not sure what the second kind of spiral is good for, but I guess it's a good way to draw snuggled up slug cats, which are a species you've invented just to keep this kind of spiral from feeling useless. This third spiral, however, is good for all sorts of things. You could draw a snail or a nautilus shell, an elephant with a curled up trunk, the horns of a sheep, a fern frond, a cochlea, and an inner ear diagram, an ear itself. Those other spirals can't help but be jealous of this clearly superior kind of spiral. Better draw more slug cats. Here's one way to draw a really perfect spiral. Start with one square and draw another next to it that is the same height. Make the next square fit next to both together, that is, each side is length 2. The next square has length 3. The entire outside shape will always be a rectangle. Keep spiraling around, adding bigger and bigger squares. This one has side length 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and now 21. Once you do that, you can add a curve going through each square, arcing from one corner to the opposite corner. Resist the urge to zip quickly across the diagonal if you want a nice smooth spiral. Have you ever looked at the spirally pattern on a pine cone and thought, hey, sure are spirals on this pine cone? I don't know why there's pine cones in your greenhouse. Maybe the greenhouse is in a forest. Anyway, there's spirals, and there's not just one either. There's 1, 2, 3, 4, 5, 6, 7, 8 going this way, or you could look at the spirals going the other way, and there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Look familiar? 8 and 13 are both numbers in the Fibonacci series. That's the one where you start by adding 1 and 1 to get 2, then 1 and 2 to get 3, 2 and 3 to get 5, 3 plus 5 is 8, 5 plus 8 is 13, and so on. Some people think that instead of starting with 1 plus 1, you should start with 0 and 1. 0 plus 1 is 1, 1 plus 1 is 2, 1 plus 2 is 3, and it continues on the same way as starting with 1 and 1. Or I guess you could start with 1 plus 0, and that would work too. Or why not go back one more to -1, and so on. Anyway, if you're into the Fibonacci series, you probably have a bunch memorized. I mean, you've gotta know 1, 1, 2, 3, 5. Finish off the single digits with 8, and ooh, 13, how spooky. And once you're memorizing double digits, you might as well know 21, 34, 55, 89, so that whenever someone turns a Fibonacci number, you can say, happy Fib birthday. And then, isn't it interesting that 144, 233, 377, but 610 breaks that pattern, so you'd better know that one too. And oh my goodness, 987 is a neat number, and well, you see how these things get out of hand. Anyway, 'tis a season for decorative scented pine cones, and if you're putting glitter glue spirals on your pine cones during math class, you might notice that the number of spirals are 5 and 8, or 3 and 5, or 3 and 5 again, 5 and 8. This one was 8 and 13, and one Fibonacci pine cone is one thing, but all of them? What is up with that? This pine cone has this wumpy, weird part. Maybe that messes it up. Let's count the top. 5 and 8. Now let's check out the bottom. 8 and 13. If you wanted to draw a mathematically realistic pine cone, you might start by drawing 5 spirals one way and 8 going the other. I'm going to mark out starting and ending points for my spirals first as a guide, and then draw the arms, 8 one way and 5 the other. Now I can fill in the little pine coney things. So there's Fibonacci numbers in pine cones, but are there Fibonacci numbers in other things that start with pine? Let's count the spirals on this thing. 1, 2, 3, 4, 5, 6, 7, 8. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. The leaves are hard to keep track of, but they're in spirals too, of Fibonacci numbers. What if we looked at these really tight spirals going almost straight up? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. A Fibonacci number. Can we find a third spiral on this pine cone? Sure, go down like this, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. But that's only a couple examples. How about this thing I found on the side of the road? I don't know what it is. It probably starts with pine, though. 5 and 8. Let's see how far the conspiracy goes. What else has spirals in it? This artichoke is 5 and 8. So does this artichoke-looking flower thing. And this cactus fruit does too. Here's an orange cauliflower with 5 and 8, and a green one with 5 and 8. I mean, 5 and 8. Up is actually 5 and 8. Maybe plants just like these numbers, though. Doesn't mean it has anything to do with Fibonacci, does it? So let's go for some higher numbers. We're gonna need some flowers. I think this is a flower. It's got 13 and 21. These daisies are hard to count, but they have 21 and 34. Now let's bring in the big guns. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 17, 20, 24, 42, 53, 54, 55. I promise this is a random flower and I didn't pick it out specially to trick you into thinking there's Fibonacci numbers and things, but you should really count for yourself next time you see something spirally. There's even Fibonacci numbers in how the leaves are arranged on this stalk, or this one, or the Brussels sprouts on this stalk are a beautiful, delicious 3 and 5. Fibonacci is even in the arrangement of the petals on this rose, and sunflowers have shown Fibonacci numbers as high as 144. It seems pretty cosmic and wondrous, but the cool thing about the Fibonacci series and spiral is not that it's this big, complicated, mystical, magical supermath thing beyond the comprehension of our puny human minds that shows up mysteriously everywhere. We'll find that these numbers aren't weird at all. In fact, it would be weird if they weren't there. The cool thing about it is that these incredibly intricate patterns can result from utterly simple beginnings.
I don't think we really need to watch part 2 and 3. I mean, they're good. You could if you want to, but it's 6 minutes. Let's watch them at the end if there's time. You know, what I wanted you to see, what I wanted you to understand is what is a Fibonacci number? That's the first thing. So Fibonacci numbers are a pattern. That's what they are. They're a pattern that's in nature. And if you watch video number 2 and 3, you'll see like they're everywhere. They're not just in flowers and vegetables and fruit and, they're everywhere. I mean, they're in lakes, they're in our cells, they're in our blood, they're in our like veins, they're in clouds. Fibonacci numbers are everywhere. And they're in the stock market too, because they're part of everything that's organic and alive. Don't know why, they just are. And so because that's true, and we, thousands and millions of people trading the stock market, are also an organism, it works for us too. It's a hugely important part of trading. So let's go back to here. Let's get rid of some of this stuff that we were looking at before. Get rid of. And how do we use Fibonacci numbers for trading? Because they are absolutely critical. They're not just like a maybe you can use them kind of thing. They're a necessary kind of thing. They're a part of trading. So how does a Fibonacci number work? You go here to this second chart, and what you'll see is there's a lot. There's fib retracement, trend-based fib extension, fib channel, fib is Fibonacci, fib time zone, fib speed resistance, fib circle, fib spiral, fib speed resistance, fib wedge. Fibonacci is a huge part of trading. So we need to understand how it works because it's absolutely critical. So there's two things we need to know. First is called a retracement, and second is called an extension. So a retracement, let's say price recently was going up. Let's say, obviously, we're back in time here. We're in August 12th. But let's say price here was going up. Now, price doesn't go up forever, right? It's going to retrace, which means come back down temporarily. Here, price is going down. But price doesn't go down forever. It's going to retrace back up and then down, retrace back up and then down, retrace back up and then down. When price is going up, it goes up, retraces back down, goes up, retraces back down, goes up, retraces. So this idea of retracing is the idea of making a correction in price before continuing in one direction. So for things that are going up, you go to Fibonacci, Fibonacci retracement. Now I use the magnet usually to make sure I'm exactly on the bar, and you would go from a low on the left to a high on the right. Now let's put this on the default. Let's see what the default shows us. Okay, this is what the default looks like when you draw your Fibonacci level. You can change a lot about this. Like, to me, this is a little too much color and everything. For one, I don't like having the numbers on the left. I like having the numbers on the right, so I'm just gonna at least move, I'm just gonna move the numbers to the right here. Levels, labels, I want them on the right. And the reason I want them on the right is I don't just draw it to the top point. I usually will pull it out. You know, I'm still drawing it to the same level. I'm still drawing it to this point right here, right? I'm still drawing it from, you know, I'm still drawing the line from here to here, right? This is still my Fibonacci level. It's just, if I do it this way, then I can't see the lines as they happen. And these lines are really important lines. So I like to pull it out a bit to the right so I can just watch them. So I can just watch them as they play out. But I'm drawing it to the same level. Now, are these lines being respected? Now you can change the numbers, but they have to be Fibonacci numbers. So like 0.618, 61.8, that's the golden ratio, which you might have heard from pop culture movies or something. But that's the golden ratio. Leonardo da Vinci used to use that in a lot of his sculptures and paintings. It's beautiful. It's just naturally beautiful. 236, 382. 0.5 is the only one that's not. I just like to use 0.5. But all of these are Fibonacci numbers. Are these lines being respected? Let's take these colors down. Let's take some of this background color out. Right now, the background is pretty bright. So let's make it dimmer. Yeah, let's look at it. Almost no background. Are these lines being respected? Let's look at this, the 236 line. So we drew it up here. It broke the 236. It almost came to the 0.5. It came back up. It touched the 236. Here, now it's a ceiling. It went right through, back down, touched it again, back down, went through, then came back down, touched it, back down. I mean, these lines are being respected. The 236 is being respected. The 382 is being respected. It keeps touching this. If you were just looking at these lines, let's say you got in here and price went up and you want to know what price is going to do, but you don't know the future yet, you would just draw the Fibonacci from the low to the high, and you would get these very important levels. So you now know, because if you didn't have this, if you didn't have the Fibonacci, you would have no idea when price is at this level. Okay, it's come down. Well, is this an important level? It's come back up. Is this important? Is this important? Is this important? Is this important? How do you know what's important? You know, but you add the Fibonacci numbers and all of a sudden you have all of these valuable lines that are being respected. And these are our new support and resistance. Now, what we're ultimately looking for, we've been talking about stacking probabilities. We're looking for, and here's the key word, confluence. We're looking for confluence. Confluence means when many things come together. So we want to look at the lines where let's put back on our 4-hour lines. We're looking for places where the 4-hour line or the daily or the weekly or the monthly touches one of these Fibonacci lines, because then it's even more important. Look at this. Look at that 236 line. That daily level, the 4-hour line we have is exactly the same as the 236 line, exactly the same. That's not a coincidence. And that tells me that this is going to be an important line, and it is. Right here, literally, if you were watching this line because you knew it was an important line, maybe here you're watching it, it goes above, but you're also looking at your other charts, your indicators here. Would I do anything? Momentum is coming up, but I don't have a clear idea on RSI. I would say here, we see that price is coming down. What's RSI doing? RSI is also coming down. No, I wouldn't do anything. There's no good divergence there. I only want divergences. So I probably wouldn't do anything right now. Then it touches the line, this 382 line, it goes through it. But here is this key point right here where it hit the 236 line. If you see right here, it hit it. And it went right, it wicked through it. It touched this line and back down, went through it, back down, went through it, back down. What was going on at this point? Because if we were watching this 236 and we knew that this was also a 4-hour level, and so we know it's a pretty important line, we're watching it. What's going on here? Well, what's the other indicators been doing? Momentum has been going up. RSI has generally been going up. Price over time here has been going down. Now, one thing to be aware of, you can't look at every single candle. You have to look at trends. So like, yes, this line broke through, it went lower, but the trend, you know, the sort of trend is that price has been going down. That's the trend. And even though this is, you know, it's only a little bit up, the trend is generally that it's going up. So you have trending up for MACD, trending up for RSI, trending down for price. I think momentum is going up. Momentum is going up. You know, look at where we were when it hit this place. Would this have been a good time to buy? No. It would have been a good time to sell. Momentum is at its top. RSI is at its top, and it's probably going to crash. Even though you had if you looked at this divergence, what you would have do is you would have bought right here. You would have taken this trade up. How much money would you make on that little trade? So you buy here, you take this trade up. That right there is a 3%, and 3% is quite good. And then when you get to this key level right here, you're watching, is it going to keep going up? Well, what's happening now? Oh, it looks like RSI is starting to go down. What's happening to MACD? Oh, it's starting to go down, and it's going down. So you would definitely not want to buy more at this price. You'd want to sell. You sell, it goes down. What happens at this key level, this 786 level, where it breaks through, but doesn't ever go lower. It just keeps touching this line. What's happening? Momentum is going up. RSI is going up. So I would buy. And if you bought at this level, you know, you make a little profit. Now, you could hold it if you want. It touches this level, nothing happens. So I let it ride. It touches the 0.5 level, nothing happens. So, you know, if you want, you could see this would be a good place to short, because you're touching the 0.5 level. So you know something's about to happen. And what's happening here? RSI is going down. MACD is going down. So short, get out. And it goes down. Then does it touch this level again? Not quite, almost. It goes to the 7, goes below. Here we have a wick above the 786, so it's touching the 786 level. What would we do there? Here it looks like momentum is going up, right? So at this point, when we're about here, here's the 786 level. Okay, here's where it touched it. So it touched the 786 level again, and you can just extend these out as lines if you want. You know, like lots of times I'll just make this into a line right here, you know, just so I have it listed as a line, whatever you want to make it. And so here at this level, I'm watching what's going on here. We have the RSI is going up. We have the MACD is going up. There's no divergence here. You know, price is also going up, so it's not a divergence. It's just indicating the trend. This is an important line. So price is touching this. I want to know what's happening. RSI is going up. MACD is going up. So maybe you buy in, you take a risk, and it goes way up. Now, you don't just draw one Fibonacci. You know, people draw a lot of them. Every time there's a big uptrend, you're probably going to draw a Fibonacci. This should be, wait, I wrote this down. I think that's opposite. It's when price is going up, the bottom is 1 and the top is 0. The bottom is 1, the top is 0. Oh, that's right. Okay. The bottom is 1 and the top is 0. I don't like to have all these levels. So you'll see on my Fibonacci that I usually use, it'll look like this. These are the levels that I keep on mine. Is 0, 236, 382, 0.5, 618, 65, 786, and 1. That's what I keep on. And sometimes I just want to look, you can turn the numbers on or off. Sometimes I only want to look at these three. The 0.5 level, and this little pocket right here called the golden pocket between 6.5 and 6.18. Sometimes that's all I want to look at. You know, the first teacher I had who taught me, this was the only one he used. Nothing else but this. And he's a value trader. When I first learned trading a couple years ago. So what he would say is, forget about all these lines except this, what he calls the reload zone. He wants to buy things when they're going up. So the price has been going up. It went, you know, we're drawing our, no. We're drawing it from here to here, essentially. And here's what my first teacher would do. He would draw it from a low to a high, low to the left, high to the right, as it's going up. And then this green box right here, he would just draw it like that. Now, he's not going to buy Bitcoin at this price. He's not going to buy it. He's not going to buy it. He's not going to buy it. He'll buy it. That's it. That's all he does. Buy anything that has gone down. I mean, assuming it's not like, you know, a terrible quality product that went down because it had got sued or some terrible news about it. But like the price went down to his buy area between 618 and 786. So you buy here, you sell exactly at your take profit level at your 4 hour. Then it went below. Maybe he would have bought here. But what happened is it went all the way below. What my teacher probably would have done is he would have just drawn a new one. You know, he just keeps drawing them. And he just keeps, it's one of the best ways you can possibly trade. The guy who taught me is a multimillionaire now, and he spent his whole life trading. He was just he was like an oil trader for like 40 years before he found out about crypto or anything. And he just trades. I mean, he just has made so much money, but his trading strategy is very, very simple. Draw a fib, buy in what he calls your reload zone, so let's say, you know, he would be watching this, and let's say you bought whatever you bought at this price. Let's say you bought at the bottom of the reload zone. He takes 5% always. So he'll always do 5% stop because he doesn't want to get stopped out. So 5% stop. And he does half on a double. That's his rule. Double means when this number in the middle is 2. So he would buy at this price over here. Now, what would happen if you made this trade along with my teacher? Let's pull this out and see what would happen. He would have bought here. Price went down. He's still in it. His stop loss is all the way down here. He's still in it. He doesn't care. He's not taking, you know, 5-minute trades. He's taking like multiple day trades. This is a 1 hour candle. This is a 1 hour candle. So if he got in, let's say on August at 8 o'clock p.m., and then it goes down, it goes down, it goes down, it starts going up. Now, some people would say take profit at this first level right here because this is a daily level. He doesn't. He waits until it's 2 to 1. So price, it didn't almost hit it, but it didn't. Then price goes back down. It goes back up. It goes back down. I mean, he wouldn't have taken profit yet. He'd still be in. But at this point, when it gets to this point, he would sell half. And the reason he would always sell half is because when you sell half, now you're playing with the market's money. And his goal is to make trading low anxiety. That's his goal, his only goal. So if he bought here at this level, let's say you buy here, and you want it to be a 2-to-1, and you want to risk 5%. Let's say you put in $100 on this trade, and price goes down, it goes down, but you're not out. 5% is a lot. So it goes down, it goes up, it goes down. At this point right here, you would sell half. So you put in $100. Now it's worth, this is not 1.17. Oh, it's the same trade. Let's say whatever. When it touches this point, if you put in $100, now it's worth 200. Take out half. So you still have 100 in, but that's not your money anymore. That's like you won that money. You took out your money. Always protect your money. Take out your money as soon as you can, and then just play with the market's money. You never want to lose your own money. If you want to have a bigger number, the lower your stop loss, the less you're willing to risk, the higher this number is, the multiple. But of course, if you made your stop loss small, you would have lost all of your money. You would have lost $100. You would have gotten out. So it depends. There's this choice between, do you want to have a really low stop loss, a really small stop loss, where you could only lose 0.5%, but you were immediately going to get knocked out. And you'd lose the trade, get back in, lose the trade, get back in, lose the trade, get back in, lose the trade. So you're losing the trade a lot of times. And then if you get back in here, then you make good money. Or you do it, but that, for a lot of people, that's a lot of anxiety. To get in, lose, get in, lose, get in, lose. That's a lot of anxiety. And so my teacher preferred, I don't want to lose this often. So let me make my stop loss a lot bigger, and then I'm not going to lose very much, but I won't make as much money. But his goal is, I'm not doing this for a year, I'm doing this for my life. So he's happy, and I think his way is a lot better, because I've seen a lot of young people now get into the market and just get wrecked and just lose so much money so fast. Where the people that my teacher teaches, over time, they all make money. They just make it more slowly. Because look, if you're doing it the modern Gen X Zoomer way, where you have these tiny, tiny stop losses, if you got in right here, you could make 17 times the money. You get in here and then you sell, let's say you sell up here, 15 times the money. Put in $1,000, you're going to make 15,000. Yeah, it sounds great, but it's so low probability. There's just such a low chance that that's really going to happen. It might, but what's more likely is that you put in $1,000. Let's say you lose 0.6%. What's 0.6% of 1,000? $6. So you lose $6. You think, who cares? It's $6. You lose $6 again. You think, who cares? It's $6. That happens 10 times. You just lost $60. And that starts to be a problem. Then you lose 66. At what point do you say, wait a minute, I just lost $100 because I just kept losing this $6 trade? Like, it adds up. Now, you only need to win once, and you made, whatever, $14,000. And yeah, it works out if you want to do it that way. But it's high anxiety, where the way my teacher liked it was low anxiety. You're going to win more trades because the price goes down, but you're still in. Price goes down, you're still in, and then price goes up and you take half. So there are different styles to trading, but the most important thing I wanted to show you today is these fibs. So with the fibs, we're taking them like I did a few. I was looking at the chart. Let me put them back up last night. Put some of these back up. Okay, here are the ones I was drawing last night. And it's like, look how these levels are being respected. Is this, like, here's where we are right now. This is August 25th. Would it be valuable information to have these lines so far? If you drew it from here, so price is going down. When price is going up, you draw it from the bottom on the left to the top on the right, bottom to the top. When price is going down, instead of bottom to the top, you draw it from the top to the bottom. So bottom to the top for going up, top to the bottom for going down. So like, would these be good things to know? Drawing from the top to, where do I draw this to? Okay, I drew it over here. This was my Fibonacci level. So let's say that it had come down to here. Let's say here. And so I drew this line and I drew it to this point over here. I drew it from here to here. This was the line I drew. Now, I don't know what's going to happen with price, but would these lines be valuable for me to have? Well, let's see. It came back up. It went over this line. It came back down. It's staying around here. You know, now we're here. I would look at trades at the 0.5 level, but here's really, remember I said we want to plan our trades. Here's what I'm looking for now. Like, for example, this is the 1 hour chart. Here's what I'm looking for today. I want to see price come up to the 618, and I want to see price go down. At the same time, that would be price going down. I want to see momentum get bigger. And I want to see RSI go up. That is it's not my prediction. It's not a prediction that I'm making, it's a plan. If this happens, I don't need to think about what to do because price RSI is going up, momentum is going up, but price is going down. If that happens, then I know what to do. I will buy. Not saying it will happen. Now, you could also, instead of doing it you could make a totally different plan. You could say, my plan is I want to see price bounce off this level and then go higher. And how would I know that I should get in and go up? How should I know that I should get in at this 0.5? Well, if price is going up, I would want to see RSI, let's say being undersold and then go up. I'd want to see momentum go up, something like that. That would give me a nice divergence. Wait, is that what I want? Because then price is going up. At this point, no, I want RSI to be going up. I would want RSI to be going up also. So if I see RSI is going up, momentum is going up, price is going up, what should I do at this key level? Maybe it looks like it's all going to keep going up. I like divergences more than just all three in the same direction. I prefer a divergence. So I prefer to see these indicators going up and price going down. I think that's a better chance that price is going to change and go back up. That's what I'd rather see. But either way, we can plan out our future. We don't know what's going to happen, and we can't pretend that we know what's going to happen. No indicator is going to tell you what's going to happen, but it can give you key levels, probabilities, and plans. So when this thing happens, you already know what to do. You already know what to look for, and if it happens, you know what trade to take. And that really, the goal is to really reduce anxiety so that you're not just like, oh my God, what's happening? You already have a plan. And since we can't predict the future, you might have multiple plans. You might make 5 of these different charts, you know, where you think, if this happens, then I do this. If this happens, then I do that. You know, I like to plan for divergences myself. So that's usually what I'm going to plan for. I'm going to plan for price to go up and go back down, or price to keep going down. But I'm not going to do anything unless it's at one of these key levels. And sometimes, let's say you feel like this Fibonacci doesn't work. Cool. Not all of them work. There's no exact science to this. Maybe you'd want to draw a little baby Fibonacci off of here. Because this is the 1 hour. What happens when you look at the 12-minute? Now, let's see if these levels are being respected on the 12-minute. I just drew a little baby, when it was 1 hour, it was this little tiny baby useless Fibonacci, but now look at the 12-minute. Is this being respected? Price went up to the 786 and used it as resistance. Now, could I have known that this would be a good place to buy? Oh yeah. I mean, momentum is about to change direction right here. RSI is going up. Touching the 786 would have been a good place to buy, and you would have made money. It would have gone up. Where did it go? It went right up to the 0.68 and came down. Exactly. And then it went back up and down. Let's go. And now it's through, all the way through. Yeah, I mean, this, let's see, where would have been the last good? If you just bought in here, where it touched that 786, touch the 786. And why would you sell? Momentum keeps going up. So I would have bought in here. Now it depends. If your stop loss is too low, that's the danger of having a really low stop loss. If you bought at this point, so I bought right here. If I wanted a really low stop loss, like, you know, 0.5%, oh, I'd still be fine. Well, that's a pretty good trade then. Man, it's a great trade right there. 0.5%. So what are you risking? You have $100. You're putting in $100. What's 100 times 0.5%? 50 cents. You're risking 50 cents. And you're making $420. But you wouldn't actually make all that money, because I'd probably take profit here. I'd take 25% out of the trade. Now I have $75 in. Then I would take profit here. Then I would take profit here, and then I would let the rest ride. But you would, I mean, this is a great trade. A 4.2 is a great trade. And all you needed to have was to have drawn that little baby fib off of this little move right here, even though it doesn't look like a big move on the 1 hour. Then on the 12-minute, you see that these levels are being respected. You watch what happens when price comes to one of these key levels. You look at momentum and RSI, you see that they're both going in a certain direction, and you take the trade. And you make sure that your stop loss is good. You make sure that you have a 1% stop loss is usually good. You want to be like my conservative teacher, 5% stop loss. You'll win a lot more trades. You want to be like my current teacher, who's a very Gen Z, the guy who wears the Pikachu hat, and he's a total crazy person, but he makes these like multi-million-dollar trades. The craziest, if you ever want to watch, is watch a guy named CryptoFace. CryptoFace makes it's unbelievable. He makes $3 to $8 million trades live. He just live streams YouTube for like 3 hours and you're watching him make millions of dollars. It's crazy. And he's modern royalty, you know, he's unbelievable. Nobody does this. You think Wall Street would live stream their trades? Wall Street would never do something like that. But these young people do, because they don't care. They're 22 or 23 years old and they're multimillionaires. They don't care. So you can, you know, your stop loss game, that's different for different people, but Fibonacci's are absolutely critical. And now, I mean, you guys are pretty close to like knowing a lot about trading. You're not far off. share. So we have the technical analysis, Fibonacci. We didn't do extensions. We'll do that next week. We did RSI. And for homework, I mean, I think you should plan out a trade. I think that's it. Don't take the trade unless you want to, you know, don't use a lot of money, but plan out a trade or use paper trading, which you can do. Lots of stock trading exchanges will allow you to paper trade, which means you're trading with fake money. But either way, like, you have enough stuff now that you should be able to like find a trade. Now, here's the key thing, back test, which means don't look for a winning trade today. You don't know what's going to happen. I mean, you can if you want, but go backwards in time. Look at the chart and look, if I had drawn a fib at this point, a Fibonacci level at this point, if I had seen this divergence, if I had watched that 21 EMA blue line, if, you know, then this would have been a good trade. That's called backtesting, is where you have a sort of strategy and you look back in time and see, because maybe you have a strategy and it only wins 2 out of 10 times. Well, that's not a good strategy. So you might change it. Maybe, you know, you just got to play with it, but go back in time. Next time, bring a chart if you can that has one of these, you know, a winning trade based on some of these strategies. Generally, the rule in trading is you need 3 reasons to take a trade. You now know about 5. You know SNR levels, you know the blue EMA line, you know Fibonacci levels, you know retracements, you know RSI, you know MACD, you know, and what my first teacher used to say is if you can find 3 reasons, you can probably find 4 or 5 or 6, but 3 is the minimum. You can't take a trade without 3 good probabilities stacked on each other. So, and you know W's and M's, you know 7 different things, and all we need is 3. So what we'll do next time is I'll decide. I'm not sure which indicator we want to use because we don't want to get overwhelmed. Really, we want to have a small basis of core things that we get good at using. But okay, any questions? I know that was all me talking, but you guys will talk more when you're a little more into charting and finding things, and then you'll be doing analysis and we'll all kind of watch or critique. And then when we get better, ultimately the goal is in a club like this over time that all of us would be analyzing different charts because we're interested in different things. We'd be helping each other. And if a trade looked really good on my chart, all of you guys could take it. And if a trade looked really good on Minsu's chart, all of us could take it. And so you just have more people watching more charts is, you know, that's the ultimate goal. And that we, you know, make money. And at some point we each put in whatever, $5, and then we have our CIP fund, and then we decide together what trades to take. And ultimately we try to, I don't know, get a pizza party or something. And then we get more people in. People go crazy when they see you start making money. Everything's fun and games until people start really making money. And then everybody's like, okay, now I need to learn. So I will see you guys next Wednesday.
Thanks.
Bye.
Thank you.